Hello, in this lecture we're going to continue on with the master budget by completing the cash budget. So let's take a look at everything we've done so far. Just a quick recap. We do need to do these things in some type of order in order to complete them properly. We have to start off with the sales budget so that we can then do the production budget, the raw materials budget, the direct labor budget, the factory overhead budget, the selling budget, and then we have the general and administrative. Then we looked into some cash items, including the cash total budgeted sales and how much we're going to receive on the sales side, and then total cash receipts calculated. We can use this information now to complete the cash budget. So we will start off with the beginning cash balance. Now, the beginning cash balance will come from the balance sheet. That's going to be where we ended last time. So if we look at the information given to us in the problem, we have cash as of 6/30 of 40,000. That's where we start. That's our beginning balance here. It's the ending balance of last period. That's where we're going to start. Then we're going to have cash receipts from customers. We will get that from what we have calculated right above, total cash receipts from customers up top, and that will equal this 490. That will give us the cash that is available to use and spend for the month of July. So we will, of course, add these two up. I'm going to say this equals this 40 plus this 490,568 and enter. I'm going to go ahead and underline this one a bit differently. I'm going to go to the Home tab and use the underline in this format. Then we're going to talk about, of course, disbursements, cash disbursements. So we have cash disbursements. We're going to have payments for raw materials. We're basically going to go through our budgets now and plug these numbers in terms of what our cash disbursements were. Now, if we go up to the raw materials budget up here, we can see, okay, we have the raw materials budget July, August, September. But the raw materials is a bit confusing because what actually happens is we buy the goods on account into accounts payable, and then we pay for them in the following month. So when we talk about cash then, we're like a month off all the time. So the cash that actually went out when we talk about the cash for July is actually the purchases for June, and therefore the accounts payable account right here on the balance sheet for June is basically the cash that is going out for in July because of that month lag of from when we purchased the stuff to when we paid for the stuff. So it's actually going to be this 200,500. So we're going to put that down here. I'm just going to type that in. Right, so that's going to be a bit confusing. The rest of them are a bit more straightforward. We're going to talk about the payments for direct labor now. So payments for direct labor, we're just going to scroll up. I'm going to say equals, and I'm going to scroll up to our budget for the direct labor. Somewhere up here, we did direct labor here in item 4. So I'm going to pick up the direct labor, this 137.99 in cell C38 for me, and that will come directly from our budget. Pretty straightforward on that one. We're then going to talk about variable overhead. So variable overhead, I'm going to say this equals, and we're going to go up to where we budgeted the overhead. So if we scroll up to the area, we have factory overhead here. We have the variable portion and the fixed portion. We're looking for the variable portion at this time. That's the 25,461 in July, cell C44 for me. I'm going to select enter, and there we have that. Next, we're going to go to the sales commission. So we have sales commission. I'm going to say that equals. I'm going to scroll up to the selling and admin area. Here's the selling and admin area. We have sales commission of, in this case, the 44,496 in cell C52 for me. I'm going to select enter. Next one we're going to have is sales salary. Sales salary, we're going to say in cell C484, I'm going to select equals and scroll up to the selling and admin once again. So we're going to scroll up here to the selling expense, or just the selling, I should say. We have the salaries of the 35 in cell C53 and enter. So there is that information. Next, we're going to have the general and administrative expense. So here we have general and administrative. I'm going to select for July. We're going to say this equals. We're going to scroll up to the area where we budgeted the general and administrative up here. We're looking for just the salaries in this case. So I'm going to select just the salaries, and we're going to select enter. That's the 11. And then we're looking for, there's some other miscellaneous items up here. So when we scroll up here and we try to pick up some other type of cash information in some other data that is given on the left hand side, for example, we have the dividends here of 10,000. It says those are in August. So I'm just going to list those. Even though we're working on July, I'm just going to put that other information in here at this time. So we're going to go down here and put in dividends. So we have dividend. I'm going to select tab. There's nothing in July, but there is some in August, and that was that 10,000 we picked up. There's not going to be anything for September, so we might as well put that in now. So then there's going to be some other miscellaneous information. One's going to be loan interest. So we had two loans. We had a short-term loan and a long-term loan. They're both going to be 1% interest rate, which is pretty nice for the long-term loan especially, but we're going to have 1% interest rate on each of those. So if we scroll up here, and I'm going to look on our balance sheet for the loan, we had a short-term of $12,000. That's the short-term loan. So we're going to do the calculation of the interest here for July. We're going to say this equals 12,000 times 0.01. That's going to be interest for this time period, the month here. So we're going to select enter, and then we're going to have the long-term interest. And so we'll have the same kind of thing here. We're going to scroll up, and long-term, it's a monthly interest rate. So notice they didn't give us the yearly rate. We're not backing into the yearly rate. It's a monthly rate. So that's why it's the 1% here. So we're going to scroll up, and we're going to find the long-term note. So if we scroll up here, we're going to say, okay, the long-term note is right here, 500,000. So we're going to scroll back down. We're going to do that calculation. I'm going to say this equals 500,000 times 1% or times 0.01. 1% of the 500,000 being the 5,000. And then the other miscellaneous piece of item here that is going to be cash disbursement is that we spent money for equipment. And that's up here, the 130. So we bought equipment. That doesn't happen all the time. We bought equipment here in September. So I'm just going to list that out now, even though we didn't buy any in July, but we're just going to put that information in here at this time. So we have the purchase of equipment. I'm going to select the tab, and again, there's nothing in July, there's nothing in August, but in September we saw that 130,000. So there's the 130. Then we got the total disbursements. We're going to add up the disbursements. We will use the trusty sum function to do this, so we're just adding this plus 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 this, and we can see in the toolbar that taskbar it's 427,177. I'm going to put the cursor here. We're going to select equals sum sum function sum, and then double click the sum function. And then we just want the 205 down to this 0 for purchase of equipment. We do want to include the 0 because we want to be able to copy the formula across. We might want to put an underline under here by going to the Home tab, Font Group, and Underline. Then we're going to have the preliminary cash balance. So we have the preliminary cash balance, and that's going to equal the cash available minus the disbursements. So I'm just going to say this equals the cash available, this 530 with 568 minus the 427,177, and enter. And I'm going to once again put an underline here by going to the Home tab, Font, and Underline. Now, why is it preliminary? Because we said that we're going to pay off the loan if we have the money to do so, and we want to have that minimum balance in the account. So we have that 12,000 of short-term loan. We're going to go ahead and pay that off now because we have the funds to do so. So we have the adjustment for short-term loan. We're going to pay off that $12,000 loan, and that will give us the ending cash balance of this equals the preliminary minus the loan that we're going to pay off because we have the funds to do so. And I'm going to once again underline by going to the Home tab, Font Group, and Underline. So we're going to move to August now. So we're going to go to August, and the beginning of August will equal the end of July in terms of cash. That's how the cash flow is going to work. And then we're going to start off with here. We don't have to retype everything in, which is nice. And we are now in cash receipts. Cash receipts will, of course, enter equal the amount from the total cash receipts up here, 487.2. Then we're going to add these two things up, equals the 91,391 plus the cash receipts here. That gives us the cash available. I'm going to underline in the cell by going to the Home tab in the Font Group and Underline. Then we're looking at the disbursements. We're going to start off with the payments for raw material. So I'm going to select equals. We're going to scroll up to where we calculated the materials. Now remember, there's a bit of a confusion on the materials. You're going to have to check the problem on this. Remember that we're going to pick up the materials in July because we purchased them and then paid for them in August due to the fact that we're paying a month after. So you have to be aware of that when we're doing the cash disbursement budget. Payments for direct labor, I'm going to say that equals, and we're going to scroll up to the direct labor area. And that's going to be the same month of August because we paid that in the month we used it. And then we're going to have payments for the overhead. We're looking for the variable overhead. We're going to select equals, scroll up, and we're looking for the factory overhead. We're looking for the budgeted variable overhead right here. And so that's going to be the 26, enter. And now we're looking for the sales commission. So we're going to say equals, because we calculated that up top. We're going to scroll up to the selling and admin. We're looking for the sales commission here, the 42,336, and enter. And then we have the salaries, sales salaries. So we're going to say that equals and scroll up to the sales salary of the 3,005 and enter. Then we are at the general and admin. We're going to select that equals and scroll up to the general and admin, which is this 11 here, and enter. Now we had already entered the dividends, the other miscellaneous information, interest on the loan. Now note we don't have any interest on this loan because we paid off the short-term loan at this time, so there's nothing there. The long-term interest is going to be the same. It's going to be that 1%. So we might as well just say that's the same as it was last month because we didn't pay any of it off. Interest rate is the same monthly rate. So then we have purchase of equipment. We didn't purchase anything. We already looked that up. Now we can add up the total cash disbursements. So that's going to equal the sum of the 207,224 all the way down to this 0. We could have copied it across as well. So that's going to be the 445,060. Note we could have just taken this number and copied it across like that. Alright, so I'm also going to put an underline here. We're going to go to the Home tab, Font, Underline there. And then we have the preliminary cash balance. That's going to equal the total cash available minus the total cash disbursements. And then we're going to have the adjustment for short-term loan. We don't have any. Loan's gone. Therefore, the preliminary is also the ending cash balance. We could say this minus 0 is still that. Alright, so the ending balance here is going to equal the beginning balance for September, or the beginning balance for September equals the ending balance for August. So then we're going to have, once again, we'll do this one more time, where we have the September cash receipts equals the cash receipts up top right there in September. And then we're going to have the total cash available equaling this 133 beginning balance plus the receipts from customers for the month of September. Going to underline that, Home tab, Font group, underline here. Then we're going to go to the disbursements and find these from the work we did up top. So we start off with the raw materials equals. We're going to scroll up to the raw materials up top. And once again, it's kind of tricky on this one because remember, we're going to pay for the stuff we purchased in August because it's going through the accounts payable. So raw materials is going to be that 212. Then we have the direct labor equals, and we're just going to scroll up to where we calculate the direct labor. That one is straightforward. We're just going to pick up the September number, which is the 143.5, and enter. Then we're looking for payments for the variable overhead. That equals, and we're going to scroll up to the variable overhead number. So we're going to scroll up to where we calculated the overhead, which is here. Here we go. And we got the variable portion, the 26,650, that is entered here. Next we have the sales commission, which equals, and we'll scroll up to the sales area. So we got selling, and the sales commission would be the 43,416, and enter. Then we're looking for the sales salary, and that's going to equal, we're going to scroll up to the sales salary, and we're in the selling and selling expenses, and that's going to be the sales salary 35, and enter. And then we have the general and administrative. That equals, we're looking for the salaries this time. So we're going to scroll up, the general and administrative. That's going to be the 11 here. And next we have dividends. We've already looked at that. We have no short-term debt once again. And the long-term is going to be that 5,000 again. That's going to give us the 130 we already looked at. That's the purchase of the equipment. Then we can go ahead, I'm going to underline it, Home tab, we're going to underline this, and then we're going to sum this up. So we're going to say this equals the sum of, and we're going to take this 112,625 down to the 130 disbursements, and that equals the 575,691. Preliminary amount then is the 607,531 minus the disbursements of the 575,691 91. I'm going to go ahead and underline this again, home tab, font group, underline. Then we have the fact that we're below the minimum. We wanted 40,000 here as the minimum. So what we're going to do is tell the bank, hey, we want to take another loan out. We told the bank anytime we drop under 40, we want to make the difference up with a loan. What's that going to be then? What do we need in order for the 31,840 to bring our balance up to 40,000? How much of a loan do we need? We need a 40 minus the 31,840. Why? Because this now plus this will equal that 40,000. So that's what we need to do that. Then, of course, if we look at the total here, the total as of the end, as of this point in time, is going to equal this 40,000. And then if we sum up, that's basically, this total here, we're going to start off as of the full time period. Starts off at the beginning here, which happens to be the same number, the 40,000 at the beginning. And then we're going to sum everything up, sum up all of this for the cash receipts for July, August, and September. So the total for the period here, I'm going to go ahead and underline that, home tab, font group, underline. Then we're going to add those two up. So this equals the 40 at the beginning plus all the cash receipts for the 3 months, the quarter. And there we have this. Now we're going to add up the disbursements for the entire quarter. So we can just do that by saying equals the sum of July, August, and September. Equals the sum of, we need the brackets there, July, August, September, enter. That formula we can copy down. We can copy that down to here. So I'm going to go ahead and do that. I'm going to say that's going to be the same formula here, 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 all the way down to the purchase of equipment. And there we have that. I'm going to go ahead and underline this. I'm going to go to the home tab, font, underline. And then sum this up. Again, we could pull this across. Like this is the sum here, enter. I'm going to put my cursor back on that, autofill, and drive it over here. And Dr. Phil does the calculation like so. And then we can do the same thing for the preliminary, which is going to be the cash disbursements. The cash available minus the cash disbursements. Put our cursor here and autofill that across. All right, and then we're going to have the adjustments here. So what are the adjustments going to be? We can say that the adjustments will be this 12 and this 8160. Now note that when we did the adjustment here, we subtracted this one out because we were paying off the loan, and this one we added this one, this plus this. So these are really going opposite directions. So to make the adjustment right, we would have to say it's going to be the 12 minus the 8160. And we could have made this a negative number and this a positive number or something like that in order to represent this is actually a decrease to the cash account because we paid off the loan. This is an increase to the cash account because we got more of a loan in order to get to that minimum balance. So then we're going to say that equals a net decrease of the 43,840 minus that net adjustment for the loan balance, and that brings us to that minimum balance because we had to bring this balance up in order to get us to that minimum balance of 40,000.